Trump did something completely unexpected. So all the people who were buying gold and silver because they expected easy money, right? Rate cuts, lots of money printing, inflation. You're all wrong, because look who Trump picked to be the Fed chairman. He picked Kevin Warsh.
They want to devalue the dollar to be able to sell manufacturing to the world. You can't sell it at a high dollar. So you devalue the dollar, you shed the reserve status, you default on it quiet, right? And by continually, anytime money moves, it's backed by treasuries, which are non-transferable, the interest. Tether buys gold. Gold goes higher, higher, higher. Van Eck funds, not James Rickards, who says 24,000, not Mike Maloney, who says 10,000, not me, who says anything. Van Eck funds said if the dollar loses its reserve stat, which I believe we will, gold will go as high as 180,000. Now let's play that out. This is
people who sold silver they don't have ultimately have to buy it back because they can't deliver it. So they got to buy back those contracts. And, we'll see what happens to prices when they do. Ultimately, I think the biggest losers are not the people who were long gold and got flushed out, but I think the people who are going to be trapped short gold and silver. Because I think a lot of these short sellers, they may be celebrating now, but I think it's premature victory dance, because the real buyers, I think, and we'll see, the Chinese market hasn't even open yet, but that's where the main buying has been coming from. And I've been observing that the entire time, right? You've got a lot of buying in Asia. You get selling when you come into the the European or the U.S. time zone. So the West has been selling and the East has been buying. But clearly, buying gold and silver have been the right thing to do, because look at where the prices are. Even after those big drops, and even if the selling continues for a bit, the prices aren't going to go anywhere near where this market started. Now, for those of you who are in Bitcoin, I would still, Bitcoin is down too, but it still makes a lot of sense to get rid of your Bitcoin and buy gold. Bitcoin didn't go up when gold was going up, but Bitcoin did go down when gold went down. So it's not going up with gold, but going down with gold. It didn't go up with risk assets. Oh, and by the way, if Warsh really was this inflation fighting hawk that he's being presented to be when it comes to the outlook for precious metals and the dollar did have a rise, because the dollar was way on the lows, and it had, a nice rise yesterday on the same story that was driving gold and silver. So the dollar index, got back up to 97. It was down, 96. But if it really was the case, the stock market would be crashing too. I mean, the stock market is priced for rate cuts and easy money. So if Warsh really was this complete, wild card, completely unexpected, who was going to pursue a tight monetary policy, the stock market would be crashing too. But obviously, Trump's not trying to crash the stock market, which is why he's not going to appoint a hawk. He only wanted to crash the gold and silver market, because that was the market that was worrying him. That was the alarm that was sounding that was going to be problematic for the dollar, for the bonds, for the whole U.S. economy. So he had to diffuse that bomb before it went off. But if you've got Bitcoin, even though you're selling your Bitcoin at 77,000 and change, and you might think, well, that's 40% below the peak. Well, silver is about 30% below the peak. So get out of your Bitcoin and get into silver. You could do that right now at shiftgold.com. You could, we use BitPay, and you can sell your Bitcoin and get silver. You could take advantage of the drop in silver and get out of your Bitcoin before it drops a lot more. Gold was moving first and Bitcoin would follow. It didn't. And then they said, oh, now that gold is down and silver is down, the money's going to rotate into Bitcoin. It didn't. It's one broken promise after another. Yes, Bitcoin did very well for the people who owned it 10 or 15 years ago. It hasn't done well for the people who bought it 1 year ago, 2 years ago, 3 years ago. And you know what? That's when most of the people bought it. That's when all the retail money came in. And they're disappointed. They haven't seen any gains. Meanwhile, they've seen other assets go way up, including the gold and silver that many people sold to buy the Bitcoin ETFs. So you have a final opportunity. This is a gift to get into gold and silver and out of your crypto, and to get rid of more fiat. Just take advantage. It doesn't matter, again, doesn't matter if the market goes lower, because you're never going to time it correctly. And so if you do get a chance to buy it cheaper, then buy it cheaper. You could always buy more. Gold is now back down there at the lows again. Okay, gold's down $183.50. So we're back around 4,700. And silver now.
Well, the only thing you need to understand is who the hell is standing for delivery every single month on COMEX. Every month for billions of dollars worth, billions upon billions upon. In December, it was the largest delivery in the history of the COMEX market for silver for a December contract, like 65 million ounces. So far in January, which is not a primary delivery month, we're over 40 million. So in the last 40 days, we've seen, 120 million ounces nearly stand for delivery. Who's doing that? A mint box of Silver Eagles is 42 pounds, 500 ounces. Who's buying 110 million ounces? And I think when you understand this, when you look at the deliveries off of the LBMA and the massive deliveries off of COMEX, what I would say to you is that the most well-funded, but more importantly, Charlotte, the most well-informed. People at that level don't do this for the hell of it, right? If you're dropping billions and billions, do you not think you know where it's going? Are you not really connected to the inside when you're spending that kind of money? And I would argue it's not a one-off. It's been every month since Trump won the election. And then what do you know? Silver is now a critical mineral, as now reclassified by the government. And what do you know? They just said, we will put state-sponsored price floors underneath all critical minerals within the next 90 days. That was a law that was just passed last week. That is to incentivize domestic mining of all of these critical minerals because, prices are where they are. If there isn't a floor at a high enough level, you can't incentivize domestic mining for things that are becoming harder to find. And then they just came out and said, now there is a proposal in front of the House and Senate. It's cleared one of the chambers. I think the House has to now pass the Senate, saying we need to build a strategic stockpile of all of these minerals. What you are seeing is not two brothers in 1980, the Hunt brothers, trying to corner a market where same environment, they see way more paper than bars, and they're supposed to be one-to-one. Well, wait, if I buy all these paper contracts, but there's not as many bars back there, well, what if we stand for delivery? What happens? Price goes way up. Well, the exchange changed the rules on the Hunt brothers. They said you can't be that long, but you can be short as much as you want. They had to sell the contracts. 2011, it was about leverage and the leverage, that speculation. So what did they do? They raised margins a bunch of times. And if you raise margins on the COMEX, meaning you have to have more in a margin account than you did the day before, they keep raising until the people who are on margin are forced to sell, which drops the price, which begets more selling, and the price collapses. Didn't come back for 15 years. On Christmas Day, about a week before this year, they raised margins. On Christmas Day, you needed $21,000 in your margin account to hold 5,000 ounce silver contract. Silver was $60 roughly on Christmas Day. The next day, they raised it by 30%. If you don't pay, we're going to unwind and liquidate your account. So now you have to put $47,000 in your margin account. $27,000 in your margin account. The reason I said 47 is today it's $45,000 an ounce to control 5,000 ounces. A company like mine will have 2 million ounces of silver at any given time. If it costs $45,000 to hedge my exposure, meaning the margin account means I short 2 million ounces on paper, on COMEX. I have 2 million here, I short. If the price falls by $10 an ounce, I'm down $20 million. I'm out of business. But what I sold short goes up by the exact same amount. But in order to maintain that position, I have to have $47,000 per 5,000 ounces. You have to have millions. That's before the gold, 35 or 36,000 for one 100-ounce gold contract. Well, what that does to the speculators, the people who might be very wealthy, but they're not wealthy like sovereign central banks, sovereign wealth funds, Tesla, Samsung, Sony,